Yeah, remember that 4-day, we actually closed green. Danielle Shay, VP of Options at Simpler Trading, back with us on a Thursday afternoon. Danielle, it's a busy one, so let's jump right into it. The market selling off once again here off of Meta. We'll get to that. I want to start with Google, though, because Google definitely, or Alphabet, I should say, stealing the headlines this week with the huge stock split and the earnings report. But as I'm sitting here right now, down 2.25%, about to make a day low on Google as well. First off, give me your thoughts on the actual earnings report, and then we'll get into the split.
I mean, I think the earnings report was fantastic. I mean, I think that YouTube is just taking over the world. You have Gen Z, millennials especially, just really taking to that platform. And we're seeing YouTube and Google be really successful at a time where Facebook is having a lot of their members just churn out and move to video services. So, I mean, I think that the Google report was fantastic. However, the fact of the matter is that this earnings season, even the companies that have had really strong reports, every single one of them has faded very quickly, which is a bad sign for the overall market.
As far as the actual trade is concerned, we had a lot of people. I mean, Google's, it was a $3,000 stock, not anymore. But as far as the actual trade is concerned, give maybe a couple of ideas as to how to play something that is so highly priced when it comes to an earnings report.
Yeah, of course. So do you have my screen share on here?
Yeah, we can throw that up.
All right, awesome. So when you're looking at Google and you're looking at the stock split, I mean, I first of all was so excited to hear about that because looking back, I mean, the past few stock splits that we've had the past couple years, for example, NVIDIA, there was this massive rally going into the NVIDIA split. I don't know if you can see this down here, but this little purple button here shows where the NVIDIA split was. And they announced it, I think, I'd have to go back and see, but I believe that it was right around here. And historically, you're going to see tickers trade higher going into that split. So for something like this, especially on a high price stock, if you're an options trader, one thing that you can do is just regularly sell put credit spreads going into the split. You have to do it at an area of support, though. You do not want to do it up on highs. It's not a good situation. Or you can trade some bullish call debit spreads, butterflies. You can also just buy the stock. I do want to trade a rally into the split in Google, but my primary concern here is, well, number one, I mean, they faded after earnings. Number two, they made a new all-time high, so it's really not a good time to go long. And number three, they were saying the split wasn't going to be until the summer, so I'm a little concerned that we're not going to see a big move in Google until closer to that date.
Yeah, July 15th. So we do obviously have, some time to kill here. But I think as, we get closer and closer and closer to that date, I mean, let's be honest, we just want some warmer weather up here in Canada. But yeah, as we get closer to that date, we should see that, buying maybe come in as far as Google is concerned. Meta, obviously the big one today, stealing the headlines this morning. What do you say? I mean, the forecast, not great. The first time ever they lose users on Facebook. But as you said, maybe this was something that was foreseen and expected almost.
I mean, honestly, I think that it's been happening for a while, and I think this is the first time that they really noted it so clearly. And I think that that's why it especially has scared investors. But the thing that I think is the most critical about this chart pattern that traders need to pay attention to is, I mean, look what it did the past 2 quarters. So what this chart is this is my earnings chart that I like to use. It's a study set. It highlights the gaps that stocks have had over earnings reports. So the last 2 quarters, this is red. So basically, well, last 3 quarters, it gapped lower, and it shows you the percentage and the dollar amount as well. So this is a pattern that I'm looking for this quarter. That's a technical pattern that also goes with lowered guidance. But basically what you see is this topping out around August, September, and October. And then the past 2 quarters, when the trend is shifting to the downside, you also have lower gaps that cannot get up above these resistance zones. And these are the stocks this quarter that have just been rolling over and dying. And so it's like, it's 2 things, right? It's the fact that Facebook isn't growing as much as they used to. TikTok is a lot more fun, honestly. And you also have this technical pattern, and it makes it really hard for these stocks to move higher post earnings.
All right, let's go to the big one. Sean's going to come in here and discuss a few of these, but I want to talk about Amazon because that's obviously the other, kind of big earnings report left over as far as the overall market is concerned. After market tonight, what's the plan here, Danielle?
So when you're looking at Amazon, Amazon has that exact same pattern that I was just discussing in Facebook. And that's why I think it's just an incredibly ominous sign. I mean, I think that Amazon is going to have obviously tons of eyes on this report. You have the fact that we went through a holiday season, so everybody's going to be looking at that. There's inflation, there's supply chain issues. There's so many things that could be a problem with this earnings report. And then if you look at the pattern, the stock, it topped out in July. It's had relative weakness ever since then. The last 2 quarters, I mean, last quarter it gapped down, 4.3%, gap down 7% the quarter before that. So, I mean, right here, when you're down on the lows, the problem with Amazon is that there's really no support until you get down to say 2,400. It has a $234 expected move. So, I mean, that could easily bring you to 2,500. But once you move outside of that expected range, that's where shareholders really start to panic. So if it's down more than $234 after hours, then that's when I expect it to just drop like a rock. I hate to short it here before earnings right down on the lows, because shorting at the lows is never a great plan. But I do think that, Amazon's up against a lot, and if this report isn't good, it's going to drag the entire NASDAQ lower tomorrow.
Hey, Danielle, how's it going?
Hey, how are you?
I'm not doing too bad, thank you. Okay, so I didn't want to talk about Snapchat, but after I've just heard you explain Amazon and we talked about Facebook a little bit, I feel like the answer is going to be the same. I mean, Snapchat, I have the daily chart up here, guys, if you can just throw on my screen here. It's an absolute disaster. I mean, we were $80 in the summer. Forget about the summer, how about Halloween? And then now we're down to 24 and change and still getting worse. Now, today, I've just been shorting, and as a day trade, it's been fantastic, short. But just for those of our audience, we talked about this yesterday, we don't ever trade options here on the show, but let's just be, as honest as possible here with Snapchat. This is not going to be an options kind of play heading into earnings. And correct me if I'm wrong, because I feel like the implied volatility, the price you're going to pay to get something like a Snapchat today, even if you thought that it was going to print down 10 more percent, I don't know what the implied move is on a name like Snapchat, but is this something that maybe you get people into? I'm pretty sure they're going to miss. And if we thought that, is it best to maybe take a lotto down to $16 or something like that? I don't know how to play, and I asked you this last week, and I have a feeling you're going to say the same answer. Maybe we just write calls.
So this is one of the number one questions I always get. And first of all, you're dead on in your analysis, because the fact of the matter is Snapchat has an implied volatility right now of 417%. That is just massive in the options market. And normally when I see that, I say, hey, this is a great opportunity to sell options, because in the options market, they're priced based on implied volatility and, of course, the underlying stock price and the time until expiration. And so what happens is here, and I can show it on this chart right here, the implied volatility rises and rises and rises into earnings. And then after that earnings report is over, that implied volatility is crushed. So options that are costing right now, let's just talk about at the money options, they're $2.85 a piece. That is going to substantially be lower tomorrow. So for that reason, we never recommend people buy options prior to an earnings report. But the fact of the matter is this quarter is the one quarter where something like that might actually work, because the moves are huge. So you have to look at the price right now and say, okay, it's trading for $24.63. It has a $5 expected move. So if you just bought an at the money put and you spent $3, you would need for it to fall at least $3 for you to even break even. Let's say it's a complete disaster on Snapchat and, it falls, $10? That's where you would really start making your money. So when I'm talking to people and people always ask me, they always want to do this. And I always say, okay, well, be careful. It's going to work maybe 2 out of 10 times. But if you nail something like Facebook, it's a huge winner, right? So you just have to look at your risk reward. If you're going to buy an in the money option, which would be something like the Delta 60 or Delta 70, I mean, I would not personally be spending $6 on an option for Snapchat earnings, but I would prefer to do it just right at the money, maybe a Delta 50, Delta 45. And that's just because it brings your risk down. It's just cheaper. Also, you could do it going out another week or two because a lot of these tickers, once they start to fall on earnings, they don't come back, right? Yeah. So you can give yourself a little bit more time. That makes it less risky. You can buy an option that's like at the money to make it a little bit cheaper than an in the money option. And if you only want to spend, less than $2, you can buy it out of the money, but just keep in mind, if you buy a 22 strike and you spend $2, it's going to have to be at least below 20 to make your money.
Yeah, no, that's the problem. I mean, that 417%, absolutely insane. Danielle, this has been a hard time for, I feel like you're a bull rather than a bear. I think we talked about that last time on the show. It's been a rough ride for that, for sure. But I don't know, you want to talk about anything with Danielle there, Neil?
I just want to say a big thanks. You're giving us another look, and our viewers something that maybe we're not giving on a day-to-day basis. And especially maybe your thoughts on the Google split and how that might, because fundamentally nothing really changes on a split, but it can make options trading a little bit more attractive there, and I think that can be, besides maybe going into the Dow, we've talked about that. Is there something that excites you about the split in addition?
Yeah, I mean, honestly, the thing about it is like, and I think we know because we're more technical traders, right? Like when you look at like the fundamentals of Snapchat, like those haven't changed, but it doesn't really matter because people are hammering the stock, right? And the same thing goes for the Google split. Like the fundamentals don't change, but because, there's so many more new market participants and people come in and they want to buy it and it's cheaper and it sends it higher, it makes for a great trade. And so, I mean, definitely I am looking at potentially trading that. And I mean, Sean, you're absolutely right. Like I'm always a bull, right? And during this time frame, what I've been doing is I've been looking for any kind of sign of any relative strength winner. And I loved your AMD pick that you were going through right before I came on the show, because I'm always looking at the semiconductors for that first shot that they're going to start trading higher. But I mean, my concern right now is just everything is just still so weak.
Danielle, tweet me a name because we got to find a name for this bull. Like we keep it on here, and the thing is, you can also change this into a bear. So it does go back and forth here, the bull versus the bear. Danielle, Shay, thank you so much for joining us today. Simpler Trading, VP of Operations, absolutely fantastic. Sorry about the Kansas City Chiefs, but I think that we all feel.
I actually had a jersey I was going to wear for you, but then they lost, so sorry.
It's all right. It was pretty tragic, but hey, in great news, I didn't spend the money to actually go to the game and see them lose in person. So
there you go. There you go.
Silver lining.
Thank you, Danielle. Sleep well, and let's see what happens with Snapchat tomorrow.
Awesome. See you later.
Ciao.